It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Asian stocks advancing with China's factory activity showing continued expansion. Japanese equities climbing as the market reopens after wild swings in the yen. Samsung's quarterly profit more than quadruples, blowing past estimates as demand for AI and memory chips recovers. And we have exclusive CEO interviews ahead. Spot crypto ETF issuer Hashkey joining us as their products begin trading in Hong Kong. Plus, Caro tells us about their fundraising plans as Southeast Asia's largest online used car marketplace gets IPO ready. Well, gets you ready on markets, never mind higher for longer. Asia tracking gains on Wall Street, boosted by China's encouraging PMI and stability in the yen. Avril Hong tracking all of that for us. Avril.
As we are seeing that positive sentiment coming through in the Asia session. And this is, I think, thanks in large part to what we got from the Mag 7s last week, that positive handover into the Wall Street session and today trickling through. Don't forget, this week we'll be watching out for Alphabet and Apple to see if that momentum will be kept up. For this part of the world, for now, we did get Samsung earnings, and that is being reflected in some of the green on the Kospi as the earnings surge came through thanks to its chip business returning to profitability. This is the AI boom helping stocks. But we also, as you mentioned there, got data out of China. And on the manufacturing PMIs for the official and Tyson numbers, they were better than expected. Factory activity expanding for a second month. So encouraging sign showing that, yes, this Chinese recovery seems to have legs. We're seeing the CSI 300 pairing gains from earlier in the session. Hang Seng still hanging on to it, but we are seeing the weaker Chinese renminbi. There's been that chatter, of course, about yuan devaluation, potentially how Beijing might have to take this really controversial step. Do note that we did see a miss on the non-manufacturing PMI. But of course, the big currency move we're watching is the yen. Let's take a look at dollar yen as we see it stabilizing. It's about 24 hours since it popped above 160, then extended that rebound really sharply. No confirmation that we have that finance ministry stepping in. The top currency official says that they will disclose results at the end of next month, but ahead of all that, something to consider is the swings in dollar yen in the past two sessions coincide with what we saw in late 2022, where we did see intervention. That was confirmed by the finance ministry. Now, something else to consider as well is how the likes of Bank of America say there needs to be continuous intervention in order to keep dollar yen below 155 till the third quarter of this year, Has.
That's right. Will it, won't it? Our next guest thinks the Japanese government's intervention will have to persist if, we want to stabilize the currency. Let's get the views of Teck Ling Tan, APEC FX and macro strategist at UBS. Teck, good to have you with us. I mean, there's no point intervening once. It needs to intervene to support the currency.
Yeah, I guess, Haslinda, the experience back in 2022 shows us that intervention tends to have a short-lived impact. Now, I think the timing was chosen perfectly in the sense that Japan was away, so it was easier to move a very big market. But as you rightly pointed out, intervention does have limits. After a 5 yen figure move, I think, while it is enough to send speculators a message that it is not risk-free to keep chasing the dollar yen upside, but until we get a fundamental change in the macro backdrop, it is difficult for the dollar yen to actually reverse as of yet.
And what do you make of that rate differential? That is what's driving the yen lower. And with the Fed expected to remain hawkish this week, I mean, what's the outlook for the currency?
Yeah, so in the near term, I think we can expect very little relief. But I think on a shorter term level, intervention does help to stabilize at least the speed of decline. On a more medium-term basis, I think you rightfully pointed out that yield differentials can remain wide for a long time. Now, in order for the speculators to stop the yield carry trade, a few things need to happen. You can either get volatility in the FX market, or it becomes very untenable to hold the yen short positioning if the yield differential gets narrowed. And I think on that note, the BOJ is forced to do something, and we have recently just upgraded a call for BOJ to hike in July, for example.
The thing is, whether BOJ or Ministry of Finance intervened or not, we're looking at a level of 156 and change. That's not that much stronger. And I mean, it wasn't too long ago we were talking about intervention at 150 and then 160. But, you know, even with movements, we're looking at 156. It is a very weak currency.
Yeah, I think to the extent that it is making headlines in the Japanese local media on a daily basis, hitting 34-year lows, right? It has actually become some sort of a political issue as well. So I think the growing chorus of the public discontent could also be an additional angle that the politicians might actually start to exert some weight on the BOJ. And even though at this point in time the feed through into imported inflation is not high, but it always happens with a lag. So I think there could be actually new forces in play from the political side as well.
China and the PBOC must be looking at the yen movements very closely as well. I mean, what do you make of where it is headed? Some are suggesting that a stability in the currency would provide stability in the yuan.
Yes. So I think so far the PBOC has been doing a great job. The market is not testing the PBOC.
Not yet anyways.
Not yet, exactly. But I think you pointed out to the fact that in trade-weighted terms, the Chinese yuan is strengthening to the likes against the Japanese yen, right? So I think even if you look at the fixing pattern in the past 2 weeks, they have been allowing Chinese yuan to weaken gradually. And I think that remains the playbook. They don't want a disorderly move, but they will actually keep drifting it weaker. And I think it would be actually not unimaginable that we get to the point where last October we saw 735 on the Chinese yuan.
In terms of the playbook for the yuan, for traders, I mean, how should they be positioning? I mean, bearing in mind that, you know, the data so far that we're getting are pretty encouraging. PMI today beating estimates, 50.4 versus 50.3. Is that enough to bring back, I guess, confidence in the currency, in the economy?
Yeah, actually, data-wise has been encouraging, even though I would caveat that it has been January, February, while the March consumption data wasn't as good, right? So that is the caveat there. But I think even as we are getting some signs of economic stabilization, we are hitting another risk event, which is the US elections. Now, on that side, it could also be a hurdle for the Chinese yuan to strengthen too much, even though it is kind of leaning against weakness so as to not be labeled as a currency manipulator. But as we get closer to elections, you can imagine the rhetoric is going to get a bit more harsh. And therefore, that's where we are looking at a year-end target of something around 720.25.
So we've looked at dollar yen, yen yuan. We should also look at the cross between the yen as well as the euro.
Yes.
It touched 170, which is the lowest level ever, well, since the euro was created. What do we make of that? What is that suggesting? Yeah,
I would say it is beyond euro yen, dollar yen. It is also in pound yen, Swiss franc yen, right? So I think it is a yen move. There is an increasing loss of confidence in the local currency to the extent that local inflation is 2.5–3%, and they are getting zero interest rate. It is a real interest rate shortfall, and that is actually a little bit getting into danger zone if the MOF and the BOJ doesn't address the issue. So I think it has gone beyond just high external rates. It is actually becoming a local issue where they have to improve the real interest rates of Japan as well.
So what are your conviction calls for 2024?
Yeah. So I think right now it is still long the Aussie against the Swiss franc. Now I think for us to find a funding currency with lower volatility, the Swiss franc is attractive, right? We have the cutting cycle in June, followed by September. Speculative position is getting a little bit rich, but I think it is difficult to find an alternative. So Swiss franc is our preferred short. And long Aussie, I think there are many fundamentals in play. It is a very strong economy, very tight labor market. RBA is only cutting in February next year, according to our forecast. So it is way later than the Fed. So I think this currency can actually withstand dollar strength in the near term.
And in terms of best carry trade for 2024?
Yeah. Carry trade-wise, I would say that short-term, the yen remains on the back foot, but I really wouldn't try to chase it much weaker from here, given that we are hitting thresholds, right? So best carry trades, I think, besides the Swiss franc, which I mentioned on a global basis, on a local basis, we like the Taiwan dollar, we also like the Chinese yuan because, as I mentioned before, as we head into later part of this year US election, the potential for massive Chinese yuan rebound is actually very limited. And with a cost of carry of about 2.5%, the Chinese yuan is actually also a popular local currency.
Why aren't you mentioning the Indian rupee as the best carry trade out there? It is stable currency. RBI has supported the Indian rupee, and yeah, some say that possibly is the best bet.
Yeah, I was mentioning the short side, pardon me. The long side definitely has to be Indian rupee and Indonesian rupiah. Indonesian rupiah has shown us that they are willing to defend against the currency. Indian rupee, of course, they have the story of bond inclusion as well. Besides the fact that their FX reserve is actually quite a good deterrent. So Indian rupee we like definitely against the local currencies, low yielders.
And the biggest risk for your projections, would it be still the Fed? Could it be a surprise for the US election at the end of the year? What might that be?
Yeah, so with regards to the US election, I think the risk is actually what is the fiscal policy of Trump administration, because the first time we saw that he was very pro-fiscal spending. And if that were to jack up US yields in a big way, it could offset any possibility of Fed cuts. So that is a big risk. Locally, I think it is the risk of a mini Asian financial crisis because obviously Asian currencies are breaking above the recent limits, right? So if there is a run on the currency, that could actually hurt the local currency trades as well.
But so far, no sign of that happening, right?
So far, it's well contained with the exception of the Japanese yen, actually.
Thank you so much for that. Teck Ling Tan, UBS Wealth Management. Now, still ahead this hour, the CEO of Southeast Asia's largest used car online marketplace. We're talking about Caro. Well, it'll be joining us for an exclusive interview. Aaron Town discusses how the firm is getting IPO ready, planning to raise over $100 million this year. And we also look at the price of success here in the Lion City, where people enjoy some of the highest standards of living, but also one of the most stressed out societies in the world. Keep it here with us. This is Bloomberg. Welcome back. Let's check in on how Samsung is doing after earnings beat expectations due a chip rebound led by, well, you guessed it, AI demand. Avril Hung has the details. Avril, you got to wonder how long this AI story will persist.
I mean, there is skepticism, but Samsung is the latest tech company that's able to turn this buzzword, translate it to help its bottom line. We did see its earnings surge. This was thanks to its chip business and that boost to profitability. This is for the first time that we've seen it since 2022. It's amid a concern about that severe downturn, those first signs of a recovery in its chip business. Note here, though, that we did see a miss relative to expectations on the mobile and its networks business, but that is still a pretty outstanding performance for Samsung's scorecard, and it actually sees that chip demand continuing for this quarter as well as into next year. So you're seeing today in that stock market performance, Samsung is outpacing the gains in SK Hynix, and this is something that we haven't quite seen in the past year, because as you know, SK Hynix as well as Nvidia, they have been benefiting from this pure play in AI. SK Hynix has an advantage, even though it's a smaller rival, because of its high bandwidth memory, and that is something that's used to power those Nvidia AI accelerators. Now, it is on its part, Samsung saying that it's going to ramp up supply of high bandwidth memory. So interesting to see how this David-Goliath battle shakes out, Haas.
That's right. You talked about skepticism. Some say that AI hype may be waning. We saw how $5 billion made an exit from Taiwan stocks alone. Avril Hong, thank you so much for that. Now, a batch of exchange-traded funds investing directly in crypto have debuted in Hong Kong today. Harvest Global Investments, the local unit of China Asset Management, and a partnership between Hashkey Capital and Bosera Asset Management, each listing Bitcoin and Ether ETFs. It's potential competition for U.S. Bitcoin products, whose popularity stoked a rebound rally this year in the digital currency. Let's head back to the Hong Kong Exchange, where Bloomberg's Annabelle Drulis is with our next guest, Belle.
Thanks, Haz. Yeah, this is the Hashkey Capital CEO, Dong Chow, joining us this morning. And Chow, let's just understand firstly this structure of the partnership, because you're issuing in collaboration or in partnership with Bosera. So what are each of you bringing into this?
Thanks. As you know, this is a joint effort between Bosera and Hashkey Capital. Sarah is one of the top managers here, not just in Hong Kong, but globally. They bring the best of traditional finance to this product. We, HashKey Group, is one of the biggest and leading Web3 ecosystem player here. We are the best in Web3 here in Hong Kong and globally. So we help to bring the Web3 ecosystem, the Web3 investors to our product.
Yeah, so Web3 experience is perhaps something that the other two issuers don't have such a long-standing strength in. But tell us more about how HashKey Group at the level, you also have other parts of the ecosystem that you're drawing upon. One of them notably is HashKey Exchange. It can also act as a custodian. It has custodial services. So how's that helping you along? Or is it helping your fee structure, for instance?
Sure. As you said, HashKey Group is an ecosystem. Our business range from VC investing, tech infrastructure, to platforms like regulated exchanges, custodians, and tokenization as well. So we, as a whole, can offer our investors not just better Web3 experiences, but also all the resources, all the expertises, and all the networks to our users and to our ecosystems.
You're saying Web3 a lot, which makes me also think, what's the demand going to be like? What are you seeing, for instance, from the Web3 space, the crypto natives versus what you've had so far from institutional investors?
Sure. This product is a historical product for not just Hong Kong, not just for HashKey and Bosera and traditional finance as well. It's also a bridge that connects investors from traditional backgrounds and Web3 as well. It gives easier access, more compliant, more easier coverage and global coverage of a Web3 ecosystem.
What sort of demand though you were seeing? Like if you've got say roughly around 100 million so far coming in, what has been from the Web3 space and what has been from the institutional?
From our communications, our exchanges with our investors, what I see now are tremendous demands from both sides. If
a percentage number.
Yeah, if roughly, I would say 50-50.
50-50.
Yes.
Okay, so that's quite a large pickup so far from the Web3 space.
Sure.
Yeah, point of difference perhaps. The tickers that you've got as well, the 3008, 3009, there is a process in Hong Kong where you can make a charitable investment to HKEX, and I know that you made around the tune of 2 million Hong Kong dollars for those specific tickers. Mm-hmm. They are auspicious, of course, the 8 and the 9 numbers, and a lot of people in Hong Kong simply remember ETFs by their tickers and not by the name of the issuer. So does that tell us that you're going after more of a retail crowd as well?
As I said, we're targeting both the institutional and the retail as well. And thanks for bringing this up. We think this is more, firstly, for charity, to help the Hong Kong Exchange Charity Foundation to benefit more of the people who has the need. And besides this, today the HashKey Group also announced our Green Bitcoin initiative. We work with the Green Bitcoin Alliance.
But are you going after more of a retail crowd, do you think, by having tickers that are easy for people to remember?
Mm-hmm. This is definitely will bring a advantage to us for the investors to remember it and to be more easily access it. The retail, I think they will show their interest and the demand will be very healthily growing. And institutions, I think the number will also bring them not just good returns, but also good luck.
Okay. The HashKey has a presence in other markets, and Japan is one that really comes to mind, given you've just got a license there as well. So what kind of conversations are you having around ETFs for crypto products in those other markets as well?
Sure. Our strategy at the group level is that global coverage, local compliance. So since very early days of our operations, we work very closely with the regulators in all the jurisdictions that are open to Web3 and crypto assets.
That would be, I guess, in this region, the most notable ones is Japan, Korea, and also Singapore. Who will be next to launch crypto ETF, do you think?
Sure. We are closely monitoring the market demand as well as working closely with the regulators. Now we are talking with regulators in Japan, in Korea, in Singapore, and also investors from the West as well.
All right. Chow, thanks so much for your time. That was Deng Chow, the Hashkey Capital CEO.
Thank you so much.
With the crypto sector, Binance CEO Changpeng Zhao will be sentenced on Tuesday after a guilty plea on U.S. money laundering violations. Prosecutors won a 3-year prison sentence for the crypto billionaire known as CZ. Read a big take on how he could end up growing richer. Jail or no jail? CZ worth an estimated $43 billion in personal fortune. Plenty more ahead. Keep it here with us. This is Bloomberg. Well, let's take a look at the EV stocks right now. BYD trading up about 0.1%. BYD, a Chinese automaker, first quarter revenue missed estimates. Its aggressive price cuts across most of its lineup ate into its financial performance. Revenue grew at its slowest pace in 4 years, up almost 4%. But the EV giant's international expansion, including selling models at higher prices, is helping to offset its price war at home. Taking a look where we are in terms of those BYD shares, up just a marginal 1/10 of 1%. Intraday up by more than 2% after the potential partnership to provide China mapping software. Oh, we're looking at Baidu right now, doing a check on Baidu shares, currently up more than 2% in Hong Kong after the potential partnership to provide China mapping software on Tesla's forthcoming full self-driving or FSD autonomous vehicle. Bloomberg Intelligence senior analyst Robert Lee thinks the deal will not make any material difference to Baidu's earnings, given the intense competition in the Chinese EV market, which is increasingly dominated by local brands. But Tesla's investors are seeing this as a game changer, with the shares soaring around 15%, their best day in 3 years. Well, in the past 5 days, Elon Musk has gained ground around $37 billion in net worth. That is his largest weekly gain since March 2022, just before he agreed to buy Twitter for $44 billion in one of the biggest leverage buyout deals in history. Let's do a check now. In terms of a stock that's back trading after suspension, we're talking about L'Occitane. It was suspended on the back of that buyout announcement. Reynold Geiger, the billionaire owner of L'Occitane, wants to take the skincare company private in a move that could end its 14-year run on the Hong Kong Stock Exchange. That stock up almost 10% as we speak. In the broader market, Asia trading higher, tracking gains overnight in the U.S. It was boosted by a strong start to the earnings season. Mag 7 didn't disappoint at all. Japan Nikkei currently up by 1.4% after coming back from that break yesterday. It is the yen that is front and center. Let's talk about intervention. It is at 156 and change. Well, that intervention yet to be confirmed. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. China markets just heading to lunch. And of course, this is on the back of that PMI data coming in better than expected, 50.4 versus 50.3. Chinese equities, of course, have been rallying back by regulatory support, but today losing some steam. But with the latest PMI, fundamentals look like they are improving as well, pointing to an economy that's trending in the right direction. CSI 300 index down 1/10 of 1%. Shanghai Comp also under pressure. In terms of the yuan, we're looking at 724.28, weakening versus the USD down about 0.2 of 1%. And of course, China's push to boost lending to support the economy is taking a toll on the country's mega banks. Avril Hung has more. Avril.
Yeah, indeed. We've seen a lot of these Chinese lenders being called upon to dole out cheaper loans to support the Chinese economy, and that's really putting pressure on their margins. Just looking at this chart, you see how that actually was squeezed and it fell to a record low at the end of last year, and that is really impacting their bottom lines. If you take a look at this next board, you'll see also how they are reacting in trade today, as we saw their profits drop. And for the likes of ICBC and Agbank, this is notable because this is a period, the first quarter, where we usually see a surge in lending. So especially well to note how this squeeze in the margins is playing out. We have the likes of Bloomberg Intelligence saying they expect further weakness in the margins, margin contraction indeed, as these lenders are increasingly leaned or called upon to cut lending rates to support the economy. So it's a bit of a mixed bag in terms of stock performance, but do note that there was that profit drop at the board. I want to take you to the earnings that we are also watching out for today, that is of HSBC. And of course, for this bank, the outlook for the Chinese economy will be of consequence. In the meantime, we have the likes of Morgan Stanley expressing confidence for their revenues. And this is thanks, they say, to some of the uptick in some of the fees side of things in general, Has.
That's right. Numbers coming out at the top of the hour. I think Avril Hong, thank you. For more, let's bring in Bloomberg M Live strategist Mark Cranfield. Mark, let's talk about China. We talk about how mega banks are under pressure, but sentiment in China generally is improving.
Yes, I mean, but you can't have Elon Musk every day. I mean, he gave everybody a nice boost yesterday, but they'll be looking for something
But PMI
more.
Encouraging. That seems to be in the right direction.
Yes, certainly. Although we've been told by people like Bloomberg Economics that some of the underlying things are coming along very slowly, probably not as quickly as the authorities would like to see. There's a little bit of traction, but by this time, we're well into the second quarter. A lot of people would have been hoping that by now the escape velocity would be there. It's clearly not happening. There are pockets, and there are some signs which are quite good, particularly related to the tech sector, EV, that kind of area, gaming sector as well. But that's not going to account for the whole country, and you've still got this drag on the banks, which is good from the point of view that the risks are being concentrated in an area where people can see it fairly clearly is a good thing. But on the other hand, these are very large institutions and they will weigh on overall sentiment for the market.
So on balance, how do fundamentals look? We're hearing the right sounds, the right messaging from regulators, and and traders are taking some comfort in it. But how do fundamentals look?
Well, people will, if you're an investor, you're going to be comparing that to what you see elsewhere as well. So they're not that fantastic that would make you want to shift a lot of money from parts of the world where the transparency is very good and you can see what's happening. So let's just, for example, compare to the United States, where we've just had already some of the major companies, the people like the Alphabets, Microsoft, these kind of people, they've all just recently been producing the results. Very good, particularly on the AI side, which is the key dynamic. That's the biggest narrative this year. It probably will continue to be for some time. People can see what's happening there. They've probably got quite a bit of money at work already. It certainly doesn't give them a reason to shift a lot of money from there to a space which is more opaque. They might see the numbers improving a bit, but not significantly enough to deter from a story they're fairly comfortable with.
The other preoccupation, and I use the word intentionally, the other preoccupation is the yen, and of course talk of whether there was intervention or not. Regardless, if that was an intervention, that is not enough. More needs to be done to support the currency.
It's a very difficult job. We haven't seen the confirmation yet, but the action, the way it happened, the kind of language we've seen from Mr. Kanda as well suggests it probably was. We'll see confirmation in the numbers soon. But yes, this time around, the situation is much more difficult for them compared to 2022. They've fumbled the messaging, unfortunately. That's part of the issue. The traders can see through some of the recent moves where they were talking harshly and then doing nothing, letting it run and run. Now, dollar yen gets to 160 before anything seems to have happened at all. Maybe it was the market correcting itself, or maybe they had some assistance. Either way, it looks too much like an emerging market reaction, not a G10 reaction. You would expect a G10 central bank to be much more decisive, and you would have expected them to honor the idea when they talked about a 10 yen move. That was 156. nothing happened. So traders are probably thinking, well, these guys really, either they don't have much ammunition or they don't have the commitment. Either way, it is not a strong message to FX traders.
Do we now know the line in the sand? Is 160 it? Because you do get a sense that even traders don't want to see it breach 160 much further.
If that is going to be a line in the sand, they really have to back this up with a lot more intervention over a period of days to absolutely get the messaging. To make 160 the line in the sand, they would need to get dollar-yen down to about 145, something like that, fairly quickly to establish a big gap so that the traders can see clearly, okay, this is costing me P&L, we're far away from this, I don't want to take this on again. So far, we're only down a few big figures, and 160 isn't that far away. All it needs is a hawkish FOMC this week. We could be right back up there again.
How should Asian central banks be looking at the uncertainty, both in the dollar and the yen, not to mention the yuan as well, that stability in the currency?
They'll be trying to ignore it as much as they can, but for them, the real impact is on interest rates. What they're concerned about most, and this was the big lesson from the Asian financial crisis. Not so much the currency movements were huge, they were very concerning. But what really hurt Asian economies was when interest rates went up too far. That was the most damaging thing to the local economies. So far, they've been able to contain that because US interest rates have risen, but in most cases, Asia hasn't followed fully on the US moves, and they're so far doing a good job of stabilizing that. As long as they can maintain that monetary policy like that, Asia will be in a good place.
Murmurings in the market that perhaps China could be considering devaluing its currency. Great implications for Asian currencies, given that, it plays a major role in that basket of Asian currencies. I mean, how should we be looking at that? How concerned should the markets be?
If they really do, if they go ahead with the devaluation, even if it's on the last one in 2015 was a relatively small one in a way. It was a 2% move initially. It went a little bit further, but in the grand scheme of things, it wasn't enormous. But even if they did something like that again, it would have very wide impact across Asia. Everybody would have to adjust to it. This time around, maybe there's a little bit more warning, but I think it's a kind of a last resort thing. China probably really doesn't want to do that, especially ahead of the US presidential elections, because who knows what kind of policies are going to be on the other side of it, where China may well feel they have to react to whatever changes happen in the US after November. So they probably would want to delay, if they've got that thought in mind, they probably want to delay as long as they possibly can to see what happens in the US.
Great insights, Mark. Thank you. Mark Cranfield, Bloomberg MLive strategist. Still to come, Caro CEO Aaron Tan tells us exclusively how he's getting the firm IPO ready as it plans to raise over $100 million this year. And we discuss the price of success in the Lion City, where high living standards mask one of the most stressed out societies in the world. Keep it here with us. This is Bloomberg. Welcome back to Bloomberg Markets Asia, and this is how India is doing. I think it starts trading in just under 5 minutes. The Sensex index in positive territory, pretty much in line with the rest of Asia. Take a look at that. We have the Nifty index also up 0.2%. Of course, front and center is the rupee versus the USD. Asian currencies have been under a lot of pressure. The rupee pretty steady at 83.4850. Well, let's talk about Caro. Now, this is Southeast Asia's largest online used car marketplace, and it's planning to raise around $100 million as it gets IPO ready. That could raise Caro's valuation to more than $1.5 billion. Let's discuss the expansion strategy with co-founder and CEO Aaron Tan. Aaron, good to have you with us. $100 million over the next 3 to 6 months. Where are you with that?
Yeah, we are almost there. I think, for us, we have been seeing a lot of interest from investors globally, generically because, the company has pretty much outperformed on all the indexes that we have set ourselves on the last year, especially around the EBITDA and our gross profit targets, right? So I think we're getting there. So I'm feeling pretty confident, that we'll get the raise done in the next 3 to 6 months.
So if you get $100 million more, that puts your valuation at about $1.5 billion. Do you think that is a fair value? of the company? Is that the number you're looking at,
to be
or
honest,
should it be higher?
If you ask any founders, I think the question is really what is fair value, right? And for that matter, do I think it's fair value? I think it depends on the investors, as they do their valuation and their own analysis and market research and stuff like that, they will come to us with what they feel is the real fair value of the company. If you ask me a 1.5 billion or so, to be honest, it is not far off what we last raised at 2 years ago, right, from that standpoint. So if you ask me the valuation of 1.5 billion, I don't even know whether it's considered fair value, but I definitely would think that it is at least market ready in that sense. Yep.
The plan is to IPO. The question is when and where?
Yeah. For us, it's very clear, right? So this is a 4th year of being PCAOB ready, right? And so in that sense, I've been spending enough money with all the big fours and stuff and whatnot over the last 4 years. So it's very clear that at least from a posturing standpoint, we are only interested in the American Stock Exchange, right? Of course, does that mean that we're not going to do potentially a dual listing or whatnot in markets closer to home?
Like Singapore?
Potentially, we never say never. I think at the end of the day, all doors are open, right? As long as it makes financial sense to our investors, our customers, and even for the company from that standpoint.
You're looking at expanding in markets like Hong Kong, in Japan. One, why? Is it also important because these markets, will be more attractive if you talk to institutional investors eventually?
I think honest truth is partially it's because of that as well, right? So there's a lot of investor interest in Hong Kong and actually more recently in Japan, right? So but the main reason really is because we looked at both markets extensively over the last year and a half. And we felt that those two markets are great markets. Number one, they are big by itself. Number two, the gross profit margins is actually very, very attractive, right? Compared to say even Singapore or even Indonesia and Thailand, where we are very dominant in. As we look at these markets, we tell ourselves, these are great markets that we can further expand and bring our value proposition across the region into more Pacific markets and stuff like that. And also to be absolutely frank, we look at life as like, a lot of the investors will really understand the Hong Kong markets, or at least they might have heard of Japan and Hong Kong, right? The truth of the matter is that half of them may not have even been to Singapore or even in Malaysia and stuff and whatnot, right? And so we feel that it is actually a good outreach for us and for actually the company to show that we have grown beyond Southeast Asia itself and we can compete around the world regionally and globally right now.
You talk about growth. Talk to us about the kind of demand you're looking at. I mean, it is a higher for longer environment. We're seeing prices getting impacted and the willingness of people to spend has also been impacted.
Yep. So we are very small. Last year's revenues was over $1 billion, but let's just say that the whole industry that we are in is over $100 billion annually, right, across the Asia Pacific region, just in the 6 or 7 markets that we are in present today, right? That basically means we are just 1 to 2% of the market, and the ceiling is there. The ceiling is far from where we are today, right? So from that standpoint, we feel very, very positive about the future growth prospects of the company, right? So 30-40% compounded growth year on year for the foreseeable future is extremely achievable, in my opinion, because the truth of the matter is the market TAM is over 100 billion, and we are at 1 billion revenue top line today. So very, very, very.
Here at Bloomberg, we've been talking about how China's flooding the market with cheap cars, and that's an issue with the US, with Europe. How are you looking at it? Is there potential of a glut in the market and possibly pushing prices much lower than where we are?
Yeah, no, I definitely agree with that, and I think that we are seeing that now in the markets that we are in, right? So in Indonesia, in Thailand, there's a lot of quite EV manufacturers. Of course, China is one of them, but of course there are other brands, if you may, that is also locally present in those markets. Koreans, you have Hyundai that's very big into Indonesia, for instance, right? And of course, Tesla is everywhere, right? And with of course natural supply and demand, right? So whenever prices, when you have too much supply of anything, prices will come down, right? So we actually foresee internally that we continue to predict or feel that used car prices, for that matter, EVs prices should continue to normalize and come down a little bit more. But to be honest, we don't think it's going to be that much more, right? Probably another 10 to 20%.
What is normalizing then?
About 10 to 20%, right? Normalizing that, i.e. will come down, but it will probably stabilize at that. Because at that level, honestly, the manufacturers are not really making that much margin.
All right, Aaron, Hang tight. Now, the search for success can be elusive and possibly nowhere more so than here in Singapore, where a competitive work environment has led to an epidemic of burnout and mental illness. Bloomberg opinion columnist Karishma Vaswani tells us it's time for the Lion City to recognize different benchmarks for success. She joins us now for more. And define success differently, right? Accomplishment differently.
Yeah, absolutely. You know, as you well know, Haslinda, there is a sort of very prescriptive route for success to success in Singapore. And Aaron, I'm sure you're well aware of it as well. It's all about gaining access to a good education, doing really well in school from a very young age, and, you know, having that sort of pressure cooker mentality all the way through your academic life, getting the right job, and then going on to get a flat with your partner and, you know, a very expensive car if you can afford it. And those are sort of the trappings of success. But a lot of people in Singapore are consistently feeling overwhelmed by this. And the statistics are quite remarkable and quite worrying, actually, because what they point to is this silent epidemic of mental illness, as well as a feeling of being really stressed out, that the government is trying to tackle and to approach. But I think having these discussions in the open, as we are today, and as I've written about in my column, goes a long way to sort of destigmatizing all of this.
And your column also highlights one person in particular, a 31-year-old retiree who says, you know what, there's a better way to spend your life. The question really is, how realistic is that? In a country like Singapore, where its only resource is people. And, you know, I have to point out, and I think he has as well, that his case is really unusual, Ashish Kumar. You know, he has the sort of liberty to be able to say at 31, I don't need to work anymore, because he's comes from a relatively privileged, background, not in terms of how much we know about his family wealth, but certainly he's been able to park his money away from the time that he's been working. He doesn't have any debts or liabilities. He's made a decision not to get married, not to have children at this point in his life, and so he's sort of free. And I think based on that, he's said, right, I'm going to retire, and he's done that at age 31, and more power to him, right? But for the rest of us, like, how realistic is that, as you point out, Haslinda? And, you know, Aaron, I'd be interested as well to know from your experience as a startup founder, just when you think about going through life like that, and in Singapore with the pressures that we've seen, you know, it is very difficult, isn't it, in so many ways?
No, definitely. Being in Singapore is not easy. But, you know, I've been in some sense privileged as well, in the sense that I have stayed in many countries in my life, right? So I've stayed in the United States, I've stayed at length in China, I've stayed in length in, you know, all parts of the world. Let's just say that I feel personally, to be honest, stress at the end of the day is self-inflicted, right? So if you have, you know, higher requirements in life, like, you know, as you said, the interviewee wanted, basically made a decision not to get married and stuff like that. That's totally fine. It's on him in that sense. But I feel personally in Singapore, while there are a lot of complaints about cost of living being very, very high and stuff like that, and as a result, you know, resulting in a lot of stress of the end consumers, I feel personally that I don't have that kind of issue, and not because I come from a very privileged position, but I actually feel that in Singapore, the cost of living is actually not that bad compared to, say, you know, America, or even in, you know, closer cities like even in Japan and stuff and whatnot. Living, right? You know, if you are living in a flat, for instance, it doesn't cost that much. Or for that matter, healthcare, right? We have extremely great healthcare in that standpoint. So I feel at the end of the day, it's just depending on what the person wants, and you know, for that matter, whether or not he feels stressed.
But Aaron, you're a founder.
Yeah.
Your pain threshold is very high. I'm curious to see how it is like for those who work for you in your team. Presumably, being a startup, they're pretty young. What are their ambitions, and how do they assess the stress levels?
You know, so internally we have about 4,500, 600 people now across, you know, the 7 or so countries that we're in today. A good proportion, as you correctly say, ma'am, are folks that are, you know, between 20 to 35 years old of age. And on that note, you know, I feel that at least I don't feel that they are internally stressed, right? So I think we subscribe to this 4 days work week thing that, you know, the government has recently pushed out and stuff like that. A lot of our folks, especially in Singapore, they tend to work from home. Right, so I think from that standpoint, we give people that flexibility as an employer, right, to all these, you know, especially the younger generation of the folks out there. And to be honest, we are forced to do that, because if we do not give that flexibility at work, what's going to happen is that people will not join you. right? So from my standpoint, again, as a CEO of the company, I feel we have good employment policies whereby allow them flexibility as work. You know, we don't really go around policing people for, oh, can I get your MC tomorrow kind of stuff. No, we do not do that kind of stuff. At least we work on the basis of integrity and trust. And on that note, you know, it hasn't been that bad in terms of hiring. And that's how I look at it, as like it hasn't been that stressful as a company.
You know, Aaron, I think that the points that you've made are so important and so heartening when you think about work culture, not just in Singapore, right, but all across the world. And I think it's that younger generation that in some ways is making the change, because they are demanding different things, as you've pointed out. But would you consider yourself an exception in Singapore? And by and large, for sort of small, medium enterprises, you know, the sort of work culture that you've described, the letting people work for 4 days at home and not having these checks and balances about whether you have an MC or not. You know, from what I've heard, you are the exception and not
Fair.
What is the culture out there?
Yeah. I mean, I think you may be right, because to be honest, I feel that a lot of the corporates in this part of the world probably still have this, you know, in Singapore language we say tauke mindset, right? So basically, they feel like, you know, it's running a small medium enterprise. I want them to work 5 days, 6 days a week sometimes, right? And I just need to sweat, you know, the asset in that sense. So you're right. You know, I do not know statistically whether we are the exception or the norm, but I tend to think that this is required moving forward, because I do feel that the generation ahead of us has changed. We do have to adapt as a company. Otherwise, we will struggle to hire people and to bring the right talent on board to grow the company. So I think, to me, that's the key. Yeah.
And it is a very important conversation to have. Caro CEO Aaron Tan and Bloomberg opinion columnist Karishma Vaswani, thank you so much for being with us today. Now let's do a check-in on Indian markets. About 7 minutes into its trading day, we're seeing gains pretty much across the board for Indian benchmarks. The Indian rupee trading at 83.48. You have it on your screen. Sensex up 0.1%, extending just ever so slightly its gains for today. Plenty more ahead. Keep it here with us. This is Bloomberg. Well, Asian markets in the positive, tracking gains in the U.S. overnight. We're keeping a watch on Asian chip makers in particular on the back of Samsung beating expectations. Its semiconductor business turned profitable for the first time since 2022, reflecting the global AI development boom. The question is really, how long might that last? Samsung Electronics up 1.8%, extending its gains for the day. SK Hynix, though, in the opposite direction, down 0.6%. Let's take a look in terms of the other asset classes we're tracking. Of course, the yen front and center. It is weaker versus the USD, down 0.3%, 156.76. We've been talking about whether or not Japan intervened yesterday when the yen breached 160 for the first time since the 1990s. Well, plenty more ahead. That is it from Bloomberg Markets Asia. Daybreak Middle East and Africa is next. Keep it here with us. This is Bloomberg.